if you are looking to rent a home in Delhi-NCR, you will have to spend a lot more money as opposed to 2019-2020. Rents for homes in Delhi-NCR region have reportedly jumped by as much as 25 to 40% on the back of an increase in demand and lack of supply. The average monthly rentals for two-bedroom flats of 1,000 square feet area has risen up by 23% since 2019 across 7 major cities as per Anurag data. Now, not just that, landlords are trying to make up for losses incurred during COVID and hoping to mint more money. And rentals there, of course, going up in 2019 as opposed to 2019, in fact, a lot more today as of 2023. In fact, Anurag suggesting a jump of 23%. Now, that's a very important story that we continue to track here. Kartik joining me at this point in time. Kartik, rentals going up, becoming more and more difficult to rent a property if you're living in Delhi-NCR.
Not surprising, Shweta, and I think this is a trend that we've seen sort of manifest itself because work from home is pretty much over. People are returning to metros, people are returning to cities where they earn their bread and take their money back home as salaries. So we've reached that inflection point where the dip that we had seen during COVID and pre-COVID, that doesn't seem to be the case anymore.
Okay.
And of course, when you look at the yield that one gets from property, that has also increased because property prices have gone up, and now that the rent that one receives on a property that you let out has gone up as well. So it also makes investing in real estate a fairly lucrative option right now. But coming back to the core question of rents sort of increasing, we've seen that the uptick has really been in cities like Gurgaon, Noida, Faridabad, in and around Delhi-NCR. And of course, the obvious suspects like Bangalore, Bombay, Mumbai rather, Chennai, and these cities which happen to be hotbeds of employment.
Okay. So what we're given to understand, and as per various researchers and data that's coming out at this point in time, is that because people are coming back from home, work from home is ending, and they're coming back, of course, to major metro cities, 7 major metro cities across India. Landowners are looking at recouping the losses.
Absolutely. They had an opportunity which they could not milk due to a demand-supply mismatch. There was excessive supply, restricted demand during the COVID times by virtue of people actually going back to their hometowns, going back to their places of origin, and thanks to connectivity, being able to work and contribute to the economy remotely. But of course, this is a time for them to actually recover their losses and come back and sort of make merry as the sun shines, pretty much.
Okay, and the fact that there is a lack of property to lease at this point in time, which means there's a lot of demand,
excessive
and
demand,
very little supply, and we are trying to, of course, figure out why that is. But I want to come back to the average monthly rental, and let's play that graphic there. As per the data that is available to us from Anurag, the average monthly rental for a 2-bedroom flat of 1,000 square feet has risen up to 23% since 2019, which is literally a very major jump there, 23%. We are trying to get Siddhart Goel, who's the head research for Magicbricks, to talk to us in just a while from now. But a 23% jump takes a substantial hit on our earnings.
Again, so you look at a regular lease that you sign with the landlord, it has a 10% year-on-year increase built in. But the fact that that took a beating during COVID, during 2020, 2021, there is more than enough reason, especially given the supply constraint and the excessive demand, that landlords, landowners, property owners are in a position today to better bargain for a figure as high as 23%. Obviously, it hits a salaried employee who's living on rent. Overall inflation is high. We've seen inflation being well above the RBI's tolerance of 6% for over a year, which has now just about come under check. But overall inflation is high. There have been job losses aplenty, not as much in India, but elsewhere in the world. Overall, the economic scenario for a salaried employee hasn't really been great, because many companies cut down on hefty bonuses that were due to employees, when companies took a beating owing to lower numbers during COVID. And increments haven't really, been at par again, because companies did not make too much money. So the common man on the street is actually battling inflation at one end, is battling not getting enough bonuses and not great increments at another end, and now of course shelling out a much higher rent month on month.
Siddhart is joining us finally.
Great.
Siddhart Goel, who's the head Research and Editorial Magicbricks, is with us at this point in time. Siddhart, thanks very much for taking time out. I want to begin by asking rather a more blunt question. What, in your assessment, is leading to this sort of a hike of 23 to 40%, some say? So if I were paying 10,000 rupees in 2019, I would be paying approximately 15,000 rupees today. Is that correct, if I'm living in Noida?
Yeah, so I mean, see, the simple thing is that when you look at it in percentage numbers, it seems like a very high growth. But you also have to remember that because of COVID, the rentals are actually either decreased or actually remained stagnant. Okay, so when that happened for a couple of years, then obviously there's going to be a lag effect which needs to be caught up with. And a lot of landlords actually, I mean, it's not that the landlords are just increasing the rates because they're trying to recover the losses. The fact of the matter is that demand has actually shot up through the roof when you compare it during the same period. If you look at it from a historic perspective, every year demand was not increasing, in double digits. The demand was more or less stagnant or was increasing in probably low single digits on a normal basis before pre-COVID. And because of COVID, when most of the people had actually moved away from, the major metros, moved to smaller towns, moved to hill stations, different locales, they were not even really staying in rentals. I mean, a lot of families were back together, staying in the same house. That the demand in the major cities was actually very low. In the last 1 year, that demand has increased suddenly. And what has happened is the existing inventory, because housing supply is not something that you can just open the tap and increase the supply, right? I mean, all these are built units. They have to be ready, whether they're furnished or unfurnished, doesn't matter. But there has to be a ready-made supply. And that supply has decreased drastically over the last 1 year. So as a result of which...
Why has the supply decreased?
The supply has decreased because the houses have taken up. I mean, it's not that these houses have gone out of the market. It's just that in the last 1 year, you've seen that families have moved back into the major cities, okay? You've had students come back because all educational institutions are full, operational. So they are not working on a hybrid model, right? Students today have to physically visit their educational institutes. So they need to be back in the cities. A lot of the offices have opened up. Maybe even if you're not attending office 100%, you are working in a hybrid model. So you are going to office at least a couple of days in the week. So because of which people have had to move back to the city. So they have taken up the houses on rent. So that's why what we're seeing is the supply has increased in the sense the inventory. If, for example, since you mentioned Noida, if Noida had 50,000 homes available for rent, that 50,000, the number became probably less than 25,000. And the demand has probably increased to 35,000. So there's a difference that has come in. So that is why rentals have increased.
Okay.
So this is basically a demand-supply dynamic which is playing out in the market right now.
And how long before they are in sync with each other?
So I think it probably will take about a year, 2 years for it to become in sync, because at the moment, there's still a lot of uncertainty that is there. I was just listening. I mean, the simple thing is because there are certain macroeconomic conditions that are playing out right now where there have been some job losses. There is a little degree of uncertainty. I mean, most of us are pretty, secure in the knowledge that the Indian economy is going to grow at a healthy rate compared to the rest of the world. That most of us are not very, fearful of actually losing jobs and unemployment shooting through the skies or anything. A lot of people, there is a churn going on. So during this churn, and because, of course, also we're seeing that the interest rates are increasing, we're seeing that prices for houses are increasing, that people are choosing to remain in rentals for some more time. And that is why it will probably take about a couple of years for these things to kind of settle down, where you won't see such sharp increases in rents.
Okay. What are the top geographies to look out for? Let's say if I were to move to one of these metro cities, which is the place that I can still buy or rent rather a property in without burning a hole in my pocket?
That's a tough question to answer because it all depends on the city and it depends entirely on where your place of work or education is, right? Because
Okay, so which are the most expensive cities right now to live in?
see, the most expensive cities, I mean,
Barring Mumbai, we know we all
correct.
know. I think that's one truth we all know. Yes.
Yeah, that would be this thing. Delhi would, of course, be within the NCR region. Delhi would be the most expensive. Certain pockets of Gurgaon would be very expensive because, especially if you're trying to live anywhere near close to DLF Cyber City, where most of the offices are in Gurgaon, right? And that is also a location which has very good social infrastructure, a lot of physical infrastructure. So because of which areas in and around the Cyber City area of Gurgaon would be very expensive. But then, of course, people are moving away to golf course extension, Sona Road. There are lots of other places towards Dwarka Expressway. A lot of construction work, the Dwarka Expressway is now finally nearing towards completion. So a lot of projects have come up out there and there's supply available out there. So these would be the typical locations in Gurgaon, for example, where the rentals, they would be more affordable. Of course, within NCR, you've also got the belts from, Noida to Greater Noida, especially along the expressway, which is affordable. So, within NCR markets, Noida, Greater Noida, that belt, or a lot of people also go to Ghaziabad and Faridabad. These places are still affordable. If you look at Bangalore, for example, the inner core regions in Bangalore would be very expensive, but a lot of employment is there along the Sarjapur roadside. So their rentals have increased quite a lot, but people are moving a little further away and spreading around. So that's why I'm saying that each city, the dynamics would depend, and there are pockets, there are availabilities which are there, and I think most people can possibly find some solution for themselves.
Okay. But, we're largely focusing on the post-COVID reality, and I want to understand the overall impact on real estate, not just on rentals, but also how expensive is buying a home today? If I were to be looking at a 2 BHK apartment in Delhi NCR, is it way more expensive today as opposed to pre-COVID levels?
I wouldn't say that it's way too expensive, okay, because the prices have increased certainly, and this is largely a function of the fact that a lot of the raw material costs have increased, right? Because post-COVID, I mean, during COVID and post-COVID, supply chain did take a big hit. There were shortages of various materials. There has been uncertainty that's been created in various markets today. I mean, being a global economy, you don't get all the raw materials within your own city. I mean, within your own country, sorry. So a lot of the raw material costs are the ones which have actually hiked up the prices. Also for developers, even the cost of finance has increased, right? With interest rates going up, financing costs have also increased. The cost of compliance that they've had to bear, because keep in mind that, RERA was rolled out a few years back. There was demonetization that took place. And all of these things also hit the real estate sector pretty hard. And there is always a lag effect of how these things play out in terms of the prices and the costs. So a lot of the increases in costs that we've seen is largely because of this increase in the cost of construction and delivery that has pushed up the prices. So we have not seen, for example, that prices have become 40 or 50% higher than pre-COVID. These increases are more in the low maybe slightly end of the single digits, so probably 8-9% to maybe going up to 11-12%, in some cases 13 or 14%. But the most of the demand, especially when you see the actual growth, has been more in the luxury segment. Okay, the really high-end and luxury segment, which was stagnant before COVID, where a lot of purchases were not taking place. That's why when you read the headline news today, largest deals taking place in Mumbai, crossing all thresholds, most expensive deals. These are all deals which are, in hundreds, in crores of rupees, 50s and hundreds of crores. And the luxury segment.
What's driving the luxury real estate market? Is it the lack of supply, as you said, or what's exactly driving the luxury real estate and the prices for it?
It's not a lack of supply. Actually, it's a completion of supply, because what's happened is today, most people are not doing speculative investments in real estate. Most of the purchases that are there are for end use. Of course, when you're looking at a luxury segment, you can't define it that, okay, I have a family of 4, so I need a 3-bedroom or a 4-bedroom apartment. In the luxury segment, the lifestyles dictate what your needs are. So for some people, they may need 2 homes, 3 homes, whatever their needs are. But what we are seeing is most of these sales that have taken place are in apartments or projects which have nearing completion, if not almost completed. So that's where, because there is that certainty that yes, we are seeing our product, we are seeing when it will be delivered. We'll get physical possession, we'll be able to do off it, furnishings, design the interiors the way we want it. That people are actually entering into those sales agreements at the end of the tenure. So I think that's what's really driving. The other thing is that people are actually seeing what they're getting, what they're paying for is what they're getting.
Okay. Siddhart, you mentioned demonetization, RERA. Do you think remnants of demonetization are still haunting real estate players, the real estate market in general?
No, it's not that. I'm just saying that that's what had led to a lot of, problems in the past. Developers actually have already adapted to the new conditions. Anyone who pays certain cash flows have overcome those cash flow problems. The way of operation for a lot of developers have changed. Today, when we're looking at the real estate markets, we're seeing that there's a lot of consolidation that's taken place. Large developers who've got a very established, good track records are actually partnering with smaller developers in different locations, where the smaller developers are offering them the land, and it's the larger developers who are doing the construction, who are providing the branding and the entire experience. So we are seeing this kind of consolidation also taking place in the market. And that's why I don't think there are any more remnants of demonetization that are affecting the real estate markets. Is that the real estate markets are now maturing and moving in towards models that we see typically, in the Western or more developed countries.
Okay. Before I let you go, the fundamental question I think that literally haunts every person who does not have a home is whether to buy or to rent. With rentals going up and buying obviously also going up, and rather proportionately, do you think it's about time that we relook at the debate of buying versus renting? What is more beneficial today?
Well, that's $1 million question, which I don't think anyone has an answer for. It depends purely on a personal need, right? My simple advice to anyone who asks me this question, because especially when they say you're a research head, can you give us this answer? I think it depends purely on what your need is. If you want to buy a house, then any time is the right time to buy a house, because you should not look at real estate just as an investment. Gone are the days when we all grew up hearing that, okay, invest in real estate, you can never go wrong. What we've seen in the last decade or so, especially post the global financial crisis of 2008, is that even Indian real estate, despite there being huge demand and supply gaps, there are real estate cycles which happen, which coincide with macroeconomic trade cycles also. So there are times when the prices can kind of seem to stagnate for some time and then probably either take a dip or start increasing. So you are seeing peaks and troughs in the real estate cycles. So which is why I don't think it's like, don't try to time the market. If you have the finances, if you have the arrangements, whether it's through taking a banking loan or whether through your own personal finance savings, that you can afford to buy a house, buy that house. Trying to wait for anything.
You're not going to make a lot of personal finance guys happy with that statement.
No, I'm not trying to make anyone happy. I'm just telling you the reality of the situation, right? Is that you can never time. If you're waiting, because I was asked this question by someone else, that because rents are moving up, should we buy? But the fact is that even the cost of real estate is increasing. Prices are also increasing. So then how do you make a distinction between both? Okay. So there is no trade-off between the two. I think you should just, if it's a personal investment, if it's a personal need, buy the real estate. If you're looking at this from an investment point of view, then obviously, just like any other investment, you need to identify the right place. So identify a location which is today underserved, which, the infrastructure is going to come in. There is going to demand which is going to build up out there, and then you can definitely hope to see a price appreciation and rental return out there also. So that's how one would have to make an investment in real estate.
Okay.